If you own an S corporation and you're paying for business expenses out of your own personal pocket, you might be missing one of the most powerful tax tools available to business owners. It's called an accountable plan, and when used correctly, it allows your business to reimburse you for legitimate business expenses completely tax-free. Not taxable income, not subject to payroll tax, and fully deductible to the business. Yet, surprisingly, many S corporation owners have never set one up. Hi, I'm Aradhana Aggarwal. I am a CPA, and my goal is simple: to help everyday people understand taxes without fear, confusion, or jargon. And in this video, I'm going to explain what an accountable plan is, why S Corp owners need one, the types of expenses you can reimburse, and the mistakes that can cause problems with the IRS. Let's start with why this matters in the first place. Once you elect S corporation status, your business becomes a separate legal and tax entity. That means the IRS expects business expenses to be paid or reimbursed by the corporation, not by you personally. But many business owners still pay for things like home office expenses, business mileage, internet and phone costs, office supplies, small business purchases. They often use personal credit cards or personal bank accounts for convenience. The problem is that those expenses may not automatically be deductible for the S corporation unless they are properly reimbursed. And that's where the accountable plan comes in. An accountable plan is simply a formal reimbursement policy that allows a business to reimburse employees or owners for legitimate business expenses. These reimbursements are tax-free to the employee or owner and fully deductible to the business. So instead of deducting expenses personally, which S Corp owners generally cannot do, the business reimburses you. Think of it as the business paying you back for money you spend on its behalf. And when done correctly, those reimbursements are not treated as wages and are not subject to payroll taxes. Let's walk through a simple example. Imagine you are an S corporation owner who works from home. Your home office represents 10% of your home's square footage. Your annual household expenses might include mortgage interest or rent, property taxes, utilities, internet, home insurance. If those expenses total $40,000 per year and your home office represents 10% of the home, then about $4,000 could qualify as a business expense. Instead of trying to claim that personally, which S Corp owners generally cannot do, the business reimburses you $4,000 through the accountable plan. Your business deducts the $4,000. You receive the reimbursement tax-free. The home office is just one example. An accountable plan can reimburse many types of business expenses, including business mileage. If you drive your personal vehicle for business purposes, your S Corp can reimburse you using the IRS standard mileage rate. Cell phone expenses. If your phone is used partly for business, the business can reimburse the business use percentage. Internet charges. If you work from home, a portion of your internet bill may qualify. Office supplies, items like notebooks, printer, ink, and small office equipment. Professional subscriptions, industry software, memberships, or training. These reimbursements allow the business to capture legitimate deductions without increasing your taxable income. Here is something many business owners don't realize. Due to changes in the tax law, unreimbursed employee expenses are no longer deductible on personal tax returns. So if you are an S Corp owner and you personally pay for business expenses without reimbursement, you may lose the deduction entirely. That means the accountable plan is often the only way to properly deduct those expenses. This is why many CPAs recommend that every S corporation establish an accountable plan. To qualify as an accountable plan, three basic IRS rules must be followed. First, the expense must have a legitimate business purpose. Second, you must provide documentation, typically receipts or records of the expense. Third, the reimbursement must occur within a reasonable time period. If these rules are followed, the reimbursement is treated as tax-free. But if the rules are not followed, the reimbursement may be treated as taxable wages. How to set up an accountable plan? The good news is that setting up an accountable plan is usually simple. The business creates a written reimbursement policy outlining what expenses are eligible, documentation requirement, reimbursement procedures. Then each month or quarter, the owner submits an expense report documenting the expenses. The business then reimburses the owner from the corporate bank account. These reimbursements are recorded as business expense, not payroll. Common mistakes to avoid. There are a few mistakes I see business owners make with accountable plans. The first is not documenting expenses properly. Even though the reimbursement is tax-free, the business still needs records to support the deduction. Second, waiting until the end of the year to reimburse expenses. Ideally, reimbursements should occur monthly or quarterly. Third, reimbursing personal expenses that are not truly business related. Only legitimate business expenses qualify. And finally, not having a written plan in place. While the IRS does not require a complex document, having a written policy helps demonstrate that the plan is legitimate. For S Corp owners, the accountable plan is one of the simplest way to increase deductions without increasing taxable income. It allows your business to reimburse you for expenses like home office cost, business mileage, phone and internet use, office supplies, and other small expenses. And those reimbursements are tax-free to you and deductible to the business. But like any other tax strategy, the key is proper documentation and consistent implementation. If you are an S Corp owner and you have not set up an accountable plan yet, it's definitely something worth discussing with your CPA. And if you want more tax strategies designed specifically for entrepreneurs and business owners, make sure to subscribe to the channel. Thanks for watching. See you next time. And don't forget to like and subscribe for more tax tips that are legal, practical, and intentional.